The market today felt like watching two different movies at the same time. On one screen, you had this beautiful, optimistic economic picture, and on the other, a political storm just brewing over Washington. So which story actually won the day? Let's break it all down.
All right, let's set the scene. It is Friday, September 26th, 2025. And after 3 straight days of losses, Wall Street finally saw some green. But the big question on everyone's mind is, was this a genuine sigh of relief, or was it just a deep breath before the next plunge?
And that relief, it was felt pretty much across the board. The S&P 500 popped up over 0.5%. The Dow actually led the way with a 0.65% gain, and the Nasdaq added just under 0.5%. The most important part, though, this snapped that painful 3-day losing streak, giving investors something to feel at least a little good about heading into the weekend.
So, where did all this good cheer come from? Well, it really boils down to one of the market's absolute favorite fairy tales, the story of the Goldilocks economy.
Now, if you're not familiar with the term, a Goldilocks economy is basically the sweet spot everyone's hoping for. The economy is growing, but it's not running so hot that it makes the Federal Reserve panic and hike interest rates. And at the same time, it's not slowing down so much that we're all biting our nails about a recession. It is, like the story says, just right.
The big reason for all this Goldilocks talk today was the August PCE inflation report. Now, this is the Fed's favorite way to measure inflation, and it came in exactly as everyone expected. For the market, honestly, this was probably the single best piece of news we could have gotten. It just calmed everyone down about more aggressive rate hikes and really strengthened that belief that maybe, just maybe, we can stick that soft landing.
Okay, but, and this is a big but, while the economic data was telling a nice little fairy tale, the headlines coming out of Washington, D.C. were telling a much, much darker story. The storm clouds are definitely gathering, and they are becoming absolutely impossible to ignore.
And here you have it, the market's core conflict, laid out side by side. The single biggest positive today? That perfect inflation data feeding the Goldilocks dream. And the biggest negative? Well, it's that giant elephant in the room, a U.S. government shutdown, which now has an over 80% chance of happening on October 1st. This right here, this is the tension driving every single decision.
It's really fascinating to see how this whole tug-of-war is playing out. I mean, look at the top 5 issues on investors' minds. You've got the PCE report, which was that one clear, shining positive. But after that, man, it's a minefield of worries. New tariffs being announced, that shutdown threat looming, growing warnings about a potential AI bubble, and even new rules being floated for chip imports.
So how did all of this chaos actually affect individual stocks? Well, government policy was a huge driver. Intel just capped off its best week since 1987, on hopes for favorable U.S. chip policy. The truck maker Picard jumped on news of a 25% tariff on imported trucks. Boeing also had a good day, climbing on positive news from the FAA and a big new order. But on the flip side, expectations really mattered. Costco actually fell, not because earnings were bad, they were good, but because they just couldn't meet Wall Street's sky-high forecasts. And then you have Apple and Dell both slipping on worries that these potential new one-for-one chip import rules could totally disrupt their supply chains.
And speaking of the tech sector, this quote from the famous investor David Einhorn really captures the anxiety that's starting to build around AI. He's warning that all these billions and billions being poured into AI infrastructure might not actually generate the profits everyone is banking on. He calls it a potential for enormous capital destruction. That is a serious warning shot across the bow of this whole AI rally.
So, with all these conflicting signals flying around, how in the world is an investor supposed to figure out what to do next? Well, let's look at 3 pretty distinct scenarios for how you could navigate this kind of market.
Basically, you've got 3 different playbooks you could run with right now. First, if you're a bull, you bet this Goldilocks rally keeps on running. You stick with the tech leaders, maybe through an ETF like QQQ. The second path is what you might call a rate cut rotation. The idea here is if the AI rally cools off, that money could start flowing into sectors that do better when rates are lower, like utilities, which you could play with an ETF like XLU. And finally, there's the defensive stance. If all this political uncertainty is just too much for you, you hedge. You look for safe haven assets like gold, which you can get exposure to through an ETF like GLD.
All right, let's put this all together. Here's the final takeaway on where we stand and the most critical risk that you really need to keep on your radar. Look, if you take away one thing, it should be this. The market is in a massive tug-of-war between economic optimism and just plain old political chaos. Today, the economic bulls won the battle.
But the war is far from over, and those political risks are immediate and they are very, very real.
So as we move forward, there are two huge risks to focus on. First is the economic risk. And ironically, news that's too good, like a massive jobs report, could actually be bad for stocks. Why? Because it would shatter that whole Goldilocks story, and the fears of rate hikes would come roaring back. The second risk is political. A shutdown could cause what's called a data blackout, where key economic reports just get delayed. That would leave the Fed and investors flying completely blind. Now combine that with new tariffs, and you've got a recipe for some serious uncertainty.
Which, of course, brings us to our final question. Today felt good. It was a nice break from all the selling, but was this the start of a real, sustainable rally built on a perfect economy? Or was it just the calm before the storm of a government shutdown and a brewing trade war? That is the question that's going to define everything in the days ahead.